Hey everybody, welcome back to Swing Trading. It's good to be back with you to start the new year with some swing trades. I'm looking forward to it very much. My name is Mike Fairbourn, folks. As always, great to see you all. Just taking a look at the chat. Many of you are here, and welcome to each and every one of you. Good to be on board with you today. I'm joined in the chat by a good friend, colleague of mine, Ben Watson, a 35-year vet of the markets, folks. Ben out on the road frequently, as many of you already know. If you've seen him present live, you get a chance to do that. Great experience there with Ben. Folks, what I want to talk about today, though, specifically is maybe some simple approaches to starting some swing trading in 2026. Starting the new year off with some key trends that might position us for some of these swing trades going forward, and definitely going through that process. So we'll dive right on into that. Let's do this first, though. Let's start with some disclosures to get the show on the road. This material is intended for general information purposes and educational purposes only. Options carry a high level of risk, are not suitable for all investors. Now, short options can be assigned at any time up to expiration, regardless of the in-the-money amount. ITM option does have a higher risk of being assigned early. Paper money software application is for educational purposes only. Please keep that in mind. Investing involves risk, including the loss of principal. Now, there's no guarantee that execution of a stop order will be at or near the stop price. Past performance is no guarantee future results, and dividends are not guaranteed. Margin borrowing involves substantial risk, is not suitable for all investors. Lastly, looking at our futures disclosures, futures and futures options trading does involve substantial risk, not suitable for all investors as well. Okay, let's do it. Let's take a look at our markets and see where we're at. The markets seem to be picking up speed towards the end of the day. And as you can see, folks, we had been in quite a little bit of a sideways channel for a little bit here. So just a brief review of the markets, but very, very helpful. And I would say an important thing to consider when we're starting off with a blank slate at the beginning of the year. What is the underlying markets? What are they doing at this point in time? We've got kind of a little bit of a measured, somewhat of a measured move over here off the bottoms to the tops. And one of the reasons why we can point this out is the fact that we have been, really since October, since Halloween-ish, we've been basically at that same range. Now, you have to say right now, this is the highest range we've been at, and perhaps today we'll have to wait and see where we stand at the end of the day, but maybe the highest close. But as you can see, we've really been going sideways here for quite a bit. I did send a little bit of a tweet out on this. I just wanted to highlight it real quick as I highlight this. By the way, you can follow Ben and I on X, Ben Watson CS, Mike Fairbourn CS. Just highlighted this down here. The S&P 500, if you look at it real quick, just as a quick note, that is a 20-period moving average, folks. And we've done a pretty good job of holding that. What was interesting is towards the end of the year when volume was light, and I highlighted that above the 20-day average, and we stuck to that. In fact, a lot of this trend has really been holding near that 20. Little dip there, but here, hold here, there as well. Of course, we did consolidate below that level, as you could see. But coming out of that dip, we held on that lower volume, which I was wondering to see if we would hold that 20 period. The question now I just posed is, will it break higher? It seems to be trading higher than it was over here, maybe taking out those prior highs. Well, I think it, in terms of the S&P 500 index, it does appear to be doing that right now. So kind of an interesting guide towards the first part of this year, just seeing how the markets are getting going. January does tend to be a pretty strong part of the year. Tends to is the key, doesn't have to be. All right, but one of the things we can do as we're trying to sort of kickstart that swing trading strategy, those methods, one way, a simplified approach to do this, which I think is kind of core to what could be moving the stock, or what could help to move the stock, and that is, folks, how is the sector performing? So I'm going to zoom over here. I've updated this for everybody. In fact, let me just do this, because I did put it over here as a separate pop out. Might as well just keep what we've got over here. This is simply just the 1 week. Now we're going to cross-reference this with a longer-term time frame here in just a moment. But in fact, it's so short that these labels keep falling off the side here. That's actually discretionary. Pull that up right there. But I wanted to highlight those, and I put them in green here as a green label, just so you can see what had been moving. This is just a 5-day time frame. So basically a one week's worth of market data going back, and you're just seeing those days coming in here. I wanted to highlight what's shown some strength. Now, we did see energy spike. Now, today it was different. It was down, but generally speaking, relatively speaking to the S&P 500, we've been performing. Remember I just mentioned to you, the S&P's been in kind of a tight range over here. We're starting to move outside of that range, perhaps, but we've been in there since late October of last year. We're still stuck in that same high range. Bouncing off the 20-period moving average, we got that down. On light volume, yes, but have we broken out above those levels yet and held? We're up there today. Will we close? That remains to be seen. But what we're doing is we're saying, how do these other sectors sit relative to the market? Now, that's kind of the first sort of a key concept that you'd want to have in mind, is that, a lot of times to move a sector higher, or an industry, a set of industries within that sector, you've got to have, in many cases, what tends to be the case is you've got strong fundamentals in here. That could be growth, it could be value, it could be growth at a reasonable price that's pushing up these sectors. Whatever the case might be, it may be geopolitical situations or scenarios like materials or the economy, financials, whatever the case might be. But seeing how these are performing relative to the market, these are not the charts of the actual S&P 500 sectors. They are relative to the market. So are they outperforming the market? If they're trending up, yes, it's just an outperformance based on relative strength. They're not the actual, they might be close, but sometimes they can look quite different from those charts. Materials really has been strong for a bit here. It's breaking out. So when we see these breaking out, what that could tell us is what in the S&P 500 over here is actually breaking out. Well, some of these might be leading the way. Materials, let's hit them. Materials, financials, over the last week. Discretionary, breaking up higher. We've got healthcare as well. Now, healthcare just broke above a range, and so too did industrials, are looking quite strong right now. Those are really kind of, I would say, actually the key 6 that have been moving, that also have longer term indications behind them as well, longer term strength. Let me show you what I mean by that. So we're going to zoom back out now and look at a 3-month, or excuse me, in this case, it's going to be relative strength, rotation. Yes, it's potential rotation. I believe these are 3 months. Just pull that up. No, there's 6. There's 6. Okay. So here are, just excuse those double labels. They will show up twice. But now going since December for materials, you see the strength. Financials, folks, we see the strength too. Okay. Discretionary, so, not as much. But look at healthcare. This is going back to October. We've been making higher highs and higher lows on a relative strength basis compared to the S&P 500. What was October? That was the time we went flat over here. We kind of started going flat. Not with healthcare. Industrials, without these labels in here. In fact, I'm just going to move them real quick so you could see it. I got too many of them. One, let's just pull this up over here because I will use that. Oh, well, it's gone now. All right, this began to shift higher highs and higher lows since actually the end of November. So what we're really looking at right now is we're basing it upon sector trends to start the new year, because just like I showed you short-term versus long-term, we looked at a weekly chart, right? Relative strength. And did you notice any interesting correlations? Basically the same ones. We didn't talk about energy too much, but energy started to come off the bottom too. But this core in particular has been moving short-term and long-term. So the trend is just kind of continuing short-term, long-term. We're getting that in place to kind of help us point us in the right direction. We've got those tools here. Now let's do this too, because I want to make sure I'm sharing these in the chat. These are just grids. They're not think scripts, but I'm just going to state it anyways, that think scripts aren't guaranteed for timeliness or accuracy, which these aren't. Notice I'm sharing a grid right here. This is going to be your, oh, what happened to it? Oh, it changed. That was funny. Okay. I'm sharing the grid. Yes, that's the grid. Okay. All right, so this is our longer term. I'm going to throw this into the chat just so you guys have this. Many of you already do have it, but I did build that short one just for this class so we could reference short and long term, try to get on the right sides, because ultimately, when the sector, the industries are showing strength, that can help to lift those underlying stocks that we're going to be looking at next here, because I'm going to dive right on into that. Okay, so this is actually our 6 month, 6 month relative strength. And remember, these are also all based upon the S&P 500. And so we're not using 6 month relative strength on, penny stocks, right? We're using these on companies, maybe many of these household names you guys have heard of. There are requirements to get on the S&P 500. This is helpful too, because when we're looking at options, we want to have options that maybe have a better chance of having some liquidity behind them as well. So it's all kind of tied in together here. Here's our 1 week. I'll just go ahead and share this grid as well for you. And folks, those of you seeing this on the recording, these will be listed underneath in the description section under the YouTube video. You just want to click on more to go down to it, okay? So this is the shorter term one right there. Okay, I just threw that in. Okay, so everybody's got that. We're good to go. Now let's dive into healthcare here right now and talk about it in a little bit more detail. I'm going to do this. Let's minimize this and go back to our regular screen. Okay, so I'm going to dive in and we'll look at some healthcare stocks. Now, we're going to use now, based upon what we just saw, short-term, longer-term sector rotation. We're going to look at some of these companies here for maybe a little bit of a boost, potential boost in the underlying flag pattern, perhaps. This was a stock we looked at last year, not too long ago, just last year. But you'll notice over here that maybe you guys are seeing, it can't just be me, because we looked at it before too. We talked about this one, but it's maybe a little bit of a lag pattern bouncing out, right? I know many of you guys see this. I'm just going to highlight it though, just so you can see it there. I've set this up here because in many cases, what we're looking for here is the possibility of a breakout. We can maybe see right now, have we closed above this range yet today? No, but some traders would say maybe it's looking like it will, because we're breaking up a little bit higher here. Kind of a double bounce off the bottom. You could see the potential for a projection, which many of you guys do, and many of you have other ways to do this, but a lot of times we're just building it upon a price pattern here. I'm going to say this is really easy. Look at that. 5, 10, 15. That's a 15-point move, just using a little bit of the grids there. 15 points off the bottom for the whole portion of the flag. If I did that again, and we just added the 15 in here, 1, 2, 3, it's going to be somewhere in here, just eyeballing it, somewhere between 97.50 if this is our bottom, because we're taking that same projection, we're moving that over here and saying, well, let's add the 15 points over here. Okay. Now, if you look at this with me, we are hitting what's referred to as a T1 target already. That is the trend target number 1. Trend target number 2, though, would be right over here, right? And that is going to be T2. Okay. So just a quick reminder on that. That's the full extension of the flag there. Now, I've set this up because in looking for this, we want to have also some of the methods that we've used previously. We don't want to forget some of the progress of obviously that we've made in 2025, or at least in terms of what you guys might want to use in terms of signals here, right? Signal indication. So watch this. I'm going to go up top. I've got another grid in here. It's just the swing crossover. So I've got a couple of these in here. That's not the one I was looking at. That's the default. So that one is not going anywhere. That was going down. That was Apple. But if we look over here, I've got a combination of 2 in here. We've talked about both of these at different times. And it can be A, okay, or B. And it can also be A and or B. What I'm referring to as, in this case, we can choose either or, whatever comes first is what some traders will do, or both of the signals to get us to have, give us an idea of a potential entry point. Now, this is a different one because we're seeing a breakout here. which is interesting. It's like one of the stronger sectors that we just looked at, short-term, long-term, the healthcare sector, right? It's in the name, actually, the stock GE Healthcare. But we're tying in both of those, but then at the same time, what we want to do is we want to say, well, in terms of a flag, we actually had the entries come in earlier. The first entry that we discussed as we've gone through this, in fact, what we can do is I'll just mark it over here on the right-hand side. I'll try to draw this out. Yeah, okay, so this would be for the first signal, okay, this would just simply be price is greater than, and what I mean by that is actually crosses above, prices are greater than, they cross above the 10-period moving average, MA. And I've got that right up top here. It's all very simple, though, as you could see. So a breakout above the 10, where did we get that? Guys, it's right there, right above the yellow. I'm sorry, it's right above the blue. We've got a few in here we wanted to look at, but we've got it's actually the blue, the cyan line, the light blue line. I can change these colors, and I probably should just to make the distinction here, but let's just run with it for now. So that's the first potential signal. Now, some of you would say maybe it didn't come first this time. Maybe we got another signal that came. Actually, it did come first. Yeah, it came yesterday. Today, we're getting another signal. That second signal is going to be nothing to do with price. In this case, price was greater than the 10 moving average, price moving above there. In this case, it's going to be the 5 MA, okay? And it's going to be crossing above. I'll just say greater than, but it's important that it's at the crossing above point, the 20 MA. Okay. So one of the two. We've said sector strength, long-term, short-term. We've said, okay, within that, it's probably a pretty good area, probably a pretty good place to look for possible flag patterns, for example, and breakouts and things like that. So we took that information and we said, we got the flag pattern, and now we're saying, well, what about the actual signals? Today, though, I have to restate it, it was the breakout we were looking at. But over here, you know, it's actually both. We got two in this case. So for some traders that are looking to use signals like this, they could say, I'm looking for 1 and 2. 1 and 2 conditions to unfold. I want to see both occur because they can occur at different times. I'm going to show you these as we go through each of these example trades today, okay? All right. We're good on that. The other way to look at it, though, as I just mentioned, you can do one or the other. I mean, what comes first? Sometimes I've done that. And oftentimes, you know, when we look at it, we're saying, well, maybe I have a couple of different signals, whatever signals those might be. Whatever comes first is good enough for me because I think I've got enough of a setup, whatever we're looking at, for some expectation of the move to occur. So you could choose whatever comes first as well. Yeah, they are a little bit different. So feel free to change those up. Change them. In fact, let's just do it right now. That light blue, when I put it on first, came through pretty good. But I was like, yeah, it's probably going to be a good idea to change these around. No doubt about it, folks. Okay, so let's do this, okay? Let's change the other blue. And what's going to be this? It's going to be our 5. So there we go. And we'll just do this. We'll change it to how about a green? Green should be different color. Ah, shoot. Kind of matches the background there. So let's do this. Last one. We'll choose one that's not on our screen. It's not going to be red either because we do have red as well. How about a purple? There we go. Clear, right? Somewhat clear. You can see it right there, though. And it is interesting because these signals, these indications, folks, are so kind of closely related, if that makes sense. I mean, they're similar. They're so close, but they can be a little ways away. There we go. Magenta. It's not purple. What was I thinking? It's magenta. All right. There you guys go. Okay, so we're good there. Let's see. Awesome. I think Ben's got us all caught up. All right, let's take a look at this now for GE Healthcare, and we'll see what we've got. Now, a quick note on GE Healthcare. Yeah, it's a little bit of a longer-term flag pattern too. Maybe we can actually pick up on it. We can see it on the weekly chart over here. So the weekly lows really came in April. But as we get into this right now, as we look, we can see a couple of different potential signals already there. We're looking kind of as the breakout here. Maybe we're on our way to T2. We got a couple of different things that we can look at here. I want to take a look at the stock price itself. Like if we were just to buy 100 shares right here, a couple of different ways to look at this. I mean, if we just go, in fact, I'll just do this over here on the active trader. So easy to do. We got the charts up. Let's go over here. Here's our 100 buy market right now. We could buy some stock. Okay, that would be one way to do it. Actually, let me just show you what we're looking at here. So if I go over here, we buy down below, just clicking on the order, confirm without sending it. What are we looking at here? It's not exactly, I mean, incredibly cheap for a round lot. You can see an amount over here as it states right there, the buying power effect, just reading it right as it stands right there. Okay, so that's kind of a cost there. There are some ways, though, to mix it up. Sometimes traders might take a portion of the trade. They might also choose to do a different way to maybe limit risk and limit the capital requirement to get into this position based upon what they expect. We put a projected move in there, right? That was going to go higher. And so we could look at that move as a range, and we could see what we can do in terms of options. But folks, what comes to mind in terms of like maybe another approach that you might look at in terms of options? I mean, are there other approaches we could utilize here? Because look at this. I mean, the stock does have volume of about 1.3 million. That could provide us with some interesting, or maybe some okay. Yeah, look at some of these spreads. I mean, they're okay. Some of them are all right. 25, that's kind of wide. This is about 15. Looking over here, they're a little bit tighter. Some of these are. Wow, they've been moving around actually quite a bit. Let me do this right now. I'm going to go down here and just go into the open interest and volume. We don't have a ton of open interest. This is interesting. It did flip as I was looking at it earlier. Of course, that's going to happen as I look at it. But there might be, sometimes they'll take better prices in between this spread if you've got some volume on the stock and they're looking for some business. Not all the time, but there's the 85s right there, and there are some others. Now, what we could do, I'm going to show it to you this way, because if we are going to do a spread trade that says straight call options, yeah, that's one way to do it. Let's see, and that would do two things. In fact, let's look at that first. If we were out 45 days here, I'm going to go down and click on the right at the money. Let me just see what we're looking at in terms of, well, at that level, let's see, we're right at a delta range is going to be about 63. Again, what the delta is, a delta is measured by, it's shown on the options as a $1 increase in the underlying stock, would basically approximately move the option range by that amount, 63 cents for every dollar. So a lot of times if they're buying long options, they might be looking at that 60 to 70 range. I'm going to click on it right here. I'm going to try to get it a little bit cheaper. I'm just going to say like a 490. And we'll just see what this looks like over here. So you can see over here, well, the max loss on this is 490 as it states. Remember on the stock, it's technically, we can lose that entire investment that we put into the company, right, when we own it. But if we were to click here too, get the trade in, and we were to go out a little bit further, like let's say, for example, the 92.50, see, we're maybe not quite as bullish on this. We get a debit now. It costs us a little bit less. It's about about $3. If I click on confirm and send over here, you can see over here, this greatly reduced that buying power effect, as you can see it right there. It's about 303. Okay. And so that's the risk, and we've defined that risk. So there is defined risk there. Now, with GEHC, if there was a big gap down in the stock and we just own the stock, well, if it gapped down $10, I mean, that would be $1,000 right there on 100 shares, right? But over here, we've limited that, and we also have a max profit of 447. So that's greatly reduced that amount. Now, we could add an additional contract in here too, but it really comes down to, what is it we want to do as we see this kind of scenario set up, that we might be looking at. What in particular is it that how do we want to set up the trade? Are we looking for a reduction, maybe some defined risk, reduction in upfront capital requirements, things like that? So the other thing before I throw it out here too, just a quick note on the stock. Obviously, if the stock were to run up, we would end up making quite a bit more. This is 100 shares, versus the one contract, long call vertical versus that one contract of the long call vertical, right? We would make $100 per every point that goes higher. So you can see how much more that would make, right? But we can still do okay with the long call vertical up to a particular range. In fact, I was looking at the 92.50 over here. And what was the profit on it? I think it was 447 or something, 400 and plus. So you want to kind of be thinking about that too. Yes, we could make more on the stock. There is more risk. There's more capital requirement. But I want you guys to kind of decide on this. And so I'm just going to state this in a poll here. And if we could, I would love to see at least 30 responses. That will give us a really good sense of where we're at by stock or by the long call vertical, right? That's the option. So here we go. I've sent that through. I'll give that just a moment to come on out. But yeah, if you guys could note on that, we'll go ahead and set this one up, and then we'll jump into the next one here as well, which is also in healthcare. And we'll give it just about, I would say, about 10 more seconds here. Interesting, this range over here too. When we came back down here on this pullback, which I'm just kind of drawing the flag. Notice over here with that, we had pretty good consolidation, sideways range. We didn't lose a lot. In other words, it was really quite a tight range on a really light volume. I don't know if you guys saw this out there, but a lot of companies were going like this on that light volume. I don't know if they're going to bounce back, but healthcare was one that actually showed up quite well. Okay, let's just go ahead and end this right now, and we'll see where we're at. How did the numbers come up? 44 votes. Fantastic. Perfect. And there we go. Okay, so we'll do the long call vertical. And remember, if you wanted to buy the stock in this paper money example, just do the stock as well. You could look at it, either way. In fact, I could put both of them on and we could just mirror them. But I want to we'll do this one because that won the poll right now. So let's go over here and let's just set this up. And I'm going to go ahead and just do it on a one-to-one contract basis. Now, remember, when we are putting in those spread trades, it will shoot for the mid-range here. So that could help to improve. I realize this one goes out a little ways, and sometimes they'll just set these out far, but they're willing to work in the middle. Now, are there better examples of more volume here? Absolutely. There really are. And you guys will find those out there. Again, though, an example of how this could work. Okay, so clicking on the 85, we're going all the way down here to about a 31 delta to sell right there. And there it is. It's about 30 now or so. But let me go ahead and just submit it in, get a good look at this. That reduced our profit. Our max profit is still below that level, and break even need to get to 88.30 over that time frame. So let me go ahead and send this through, and there we go. Okay. So we got that one in. That was a lot to look at, but now that we've gone through some of that and kind of laid the groundwork out, what I wanted to do next is hit one more in the healthcare before we take a look at industrials, because that was another stronger sector out there. So here is HCA. Now, it is in no way close to the T1 yet. So that could still be a target range, right? And the reason why is we've pulled back so significantly here. We didn't have that kind of pullback. GEHC was more like this, which could also be interesting too in its own right. And it's kind of breaking out a little bit as it stands right now. But you see that pullback here. Okay, we're getting a couple of those signs. So what do we get for our one condition, our two condition? Well, yesterday, we actually got both of these simultaneously off the bottom. We got a little additional confirmation too on this stock that it may be. This is why we look at these extra sort of signals in here, because it could be doing what it's been doing in the past over here a little bit. This was kind of a sideways flag. This is a little bit longer term one, but we did get a close above the high of the low day, and we did also break right above this level. So in some traders' books, this is a little bit more interesting when they say, well, and we haven't closed above. We've got still half an hour to go in the trading day. But the fact that we did take out this high, this mid-range high over there, that can be an additional form of confirmation. Yeah, let's pull up the weekly. Good. Let's pull that up real quick and see what we've got. So I've got that over here. So just the weekly's right there, and you can see that we've had a history of this, and it's no stranger to some of these flags that might present themselves on a swing trade type setup, right? It's no stranger to it. We've got that in place. And there's your monthly. A lot of upward moves in here on this HCA. Back to it though, you can see that cross right there and the crossover yesterday as well. So what we can do, we could also look for a type of entry. This one though, it just didn't have even, it's only got 600,000 shares traded today right now. Probably finished close to this level, but look at the ranges here. They're a little bit wider. That's $1 wide, a little bit more than $1 over here. We're just going to stick to the stock over here, and it is fairly expensive, this stock. I mean, it's over in the, we're getting close to the $500 range. So what I'm going to do right now, and what we can do is look at an area for a potential exit in the form of a stop that we talked about. Let's do this right now. I'm going to go over here to the trade, and I'm going to right click. I'm going to go down here into buy custom. Let's put a bracket trade in there. We're going to do this one a little bit differently. This is already set up. I'm going to do this because it was kind of a longer term pullback. Let's look at this one as a T1 target. You can always change your mind on these paper trades if it gets up there and shows some real strength powering through that T1, right? Like we've seen previously, there's been some pretty strong moves. But we're going to set that as our target, and that is just below that 520. In fact, I would estimate I'm going to shoot for 518 over here. Now, since we got a crossover on both of these, we can also give it a range, but we can keep it as tight as we want to for the possible exit level. Now, if this is a breakout bar, if we wanted to keep it really quite tight for the possibility of getting out quicker, using this same bar, because this is the next follow-through day, there's our low right there. Now, question is, actually, you know what? This is better. I'm going to use this thinkorswim because it's just a thinner line and it's so accurate. If you guys are using this right over here, the $sign one, just go over here, point right to it. Boom, you got it right there. So that's a level. Think in terms now of reward, potential reward versus potential risk. Let me just map this out because this is what we want to do. This is where these price patterns can be helpful, assuming we get somewhere in over here. We'll put this in red. So to the downside, our risk represents that line if we're getting out close to that level, because we're going to put that stop just below today's low. Because to be honest with you, when this one has run, it's just run. It's just run. It really doesn't dink around too much and hold around these bottoms. When it's ready to go, it just goes. And we're kind of anticipating it's just ready to go. We don't know that. We're just looking at it from a perspective of a trader here. That's our risk. That's our potential reward right there, real close to this high. So you can see the size comparisons here. This is a much higher if we're looking at reward over here relative to the risk. Have it in red. The risk is smaller, okay? Sizably smaller. At that level, if we're assuming we get out at that point. That level just below 470, 420, 470. I'm just going to go 474 even. And this was 518. So I'm going to go back to my trade. I'm going to flip these over into, well, good till cancel. Let me adjust a few things here in a second. Okay. 518 for our upside target. Downside target in terms of our potential exit range, we said 474 even. Okay, that represents our potential risk and reward range based upon this entry price right there. Now, it is an expensive stock, and I'm just going to be mindful of this. We can change it to whatever we want, but in this case, I'm just going to do 25, okay? 25 shares. Let's look at we'll confirm and send this. Let's look at it real quick and see what we've got. That buying power effect, as it states right there, just the 25 shares. Yeah, the 100 is going to be quite a bit more, but it's about a little over 6,000 right now, as you can see it right there. Okay. We do have that potential exit level in there, and we've mapped out that reward versus risk. Okay. Which is a favorable, you have to say, if it were to turn out, obviously a favorable reward risk ratio. Now, I clicked on that. I'll make sure it fills. I didn't see it fill just yet, but yeah, I probably waited too long and talked too long about it. Let's see. And by the way, it'd be fascinating too if it doesn't hold this high. It's coming down a little bit. That's not unusual on these breakout moves, but we shall see. Okay. Chris says ATR over 10. That's another way to do it too. The ATRs. We've talked about a couple of these different ones too. Let's just pull it up. ATR is a way to do it. Your average true range, as you look at it, in this case, yeah, yeah, exactly. Look at that. It's close, isn't it though? I mean, it's close. 482 to 474. It gives it a little bit more, but there you go if you were looking at a 1 ATR move. All right, but the expectation is hey, we might start to move here. At least that's the way we're looking at it, just through the eyes of a trader that we're talking about right now. All right, let's continue. The other area that we'd looked at too, that was actually moving really quite well. It's totally moved off our screen here, but that was industrials. The industrials and the Dow Jones Industrial Moving Average not moving, has been moving too. Let's do this. Let's go over here. I'll pull it up right now. Here are some in here we could look at. Here's AOS. AOS, not as strong. You're getting a couple of different signals. There's our fill right there on those 25 shares, HCA. You're kind of bouncing off this level. Again, folks, we have short term. I'm going to highlight this just so we get it down. Short term, longer term sectors. They're giving us some indications here. We're doing that for 2026 because a lot of times these sectors, these trends, as I recall, actually way back in Ben's class that he used to teach when he was looking at markets and sectors as well, Ben would go into detail and routinely Ben would say, look at this. We've been up a month. We've been up 3 months. 3 months later, not in all cases, but it happened frequently. It was up 6 months. It was up a full year. We're looking at that early in the year and saying there might be something here. Industrials, healthcare. They're showing some strength, but we're building on that. So I just wanted to highlight it because that's how we got here. It's not just any old flag. We're trying to, kind of build on that potential for more strength within the fundamentals of the sector or industry. So that's one. AOS. We also have the airlines too. The airlines with some of the energy, which has been moving higher. So here is another breakout with Delta. Now, if this were a flag, it would be a sizable move. I mean, if we hit a T2 target, you could just see right there this pole right here, which also we got some of the signals that we were looking at, the 10 prices above the 10 moving average, the 520 crossover, both there. You can just see where something like that could go. So this could be an interesting one to keep an eye on as well. Energy stocks in general, based upon the news and all the situation, that's going on over there, we don't know how that's all going to pan out. But I will say energy stocks had been moving. Just a quick note on that. There we go. I'm just going to highlight this for you guys. So oil equipment and exploration stocks, I posted this, really gapped up higher here. That was basically just a major gap across the board here on many of these. And one of the things is we'll see how that plays. Cheaper energy costs would actually benefit some of the big transportation companies. Airlines, it's big on jet fuel in general, and labor costs, of course, can be expensive. But there's DAL, there's AAL right there. We can do a quick trade on one of these too, just in the final minutes here. We can also look at this one, GD. Okay, GD long flag, and this might pop up here for us on a weekly chart. If I really zoom in and you can look at it, wow, Ooh, that hits. That's a very, very long flag pattern, as you can see. I mean, that's like off of here, but it's still extended. In fact, I wouldn't draw it off those, but maybe the first part of this move over here, that might be your pull. There's your flag. Do you guys see it? There's the flag and the potential, because that one would just, well, that's still very, very big. That's a massive flag pull. That's 100 points, basically. There's two, no, not quite. More like 80 points right there. But it's already starting to get going. So that would be a flag, kind of a breakout too, that we could be looking at. Now, when you look at this, there is also another swing trade within here. Instead of that long-term flag, let me show it to you. You guys are probably familiar with this because we've talked about it in this class, but there is also, look at this, sideways channel. What do we call this? A measured move. Anytime you get a breakout after a range, there can be high levels and low levels to keep an eye on. We're getting close to breaking out above that range. I think technically we are above, maybe, okay, we're not closing yet, but we're getting close to closing above this high. A measured move is simply this range. Now I'm trying to put it more in a swing trade type of time frame. And we're getting these on some of these breakouts. And if you look at this over here, I'm going to estimate, go ahead and go back and take a look at it, but it's probably close to somewhere around 12 points. And all we're simply doing from this range is we're just going to go like this and just go 12 up here. And that would be our target. I think I drew that a little bit too high, but maybe whatever that line represents, it's like 12 right there, right? Another 12. You're going to have to go ahead and, take a look at it specifically to find it. But that's another way to look at this, okay? So you got GD doing that, and you've got others. The last one I'm going to throw out there for you guys in the same group, HWM. See, there's the test and the breakout right there. We'll see if this unfolds. Here's your weekly chart right there. These are just long-term trends, but they started off, 1 year up, and now they just keep on, they have kept going, and we'll see how this does unfold. Yeah, GE's in there too. It falls right into that. Say, yeah, GE and GE Healthcare. Thanks. Hey, that's cool. You guys are looking at some of these within these industrials, but there you go. Look at that one breaking out right there. So I'm going to leave that one up to you. I'll probably select one here for us next week because we are starting off a new year with new trades. And so we'll keep tabs on those, see that performance week to week in terms of how those set up. But today, we did look at big picture sectors, rotation specifically, and then short term for indications 2026. Can we ride those off further throughout the year? Maybe it's a set of bull flags throughout the year as well. We could look at that. Sometimes these will run, just like we're saying here, over an extended year's time frame. But they started off strong and they ended strong, many of them. We'll see if that's what happens with these companies, folks. If you got value out of our discussion today, do me a favor, smash that like button. Just lets me know that you guys are getting value out of this. Be sure to subscribe to our Trader Talks channel as well. Love to have you on board there with us. Folks, in addition, though, today, yeah, we did look at some signals as well. We took it down to the minute. We tried to find these companies, and then we went down to actual signals, one or two and or both. All right. Well, with that, thank you, Ben, for your help in the chat. It was great to have all of you here today. Look forward to future discussions with you. You guys have a fantastic rest of the day. We'll see you next time.